Welcome back to KTM Investing 360, where smart money meets smarter minds. Today we're diving into how Warren Buffett and Charlie Munger turned fear into fortune during the 2008 financial crisis.
From Goldman Sachs to GE to Munger's bold bank stock moves, we'll break down the investments and the timeless wisdom behind them. Let's go back to 2008. The world was in panic. Banks were failing, credit markets frozen. The S&P 500 dropped nearly 40%. Most investors ran for the hills.
But not Warren Buffett. In September 2008, Buffett's Berkshire Hathaway invested $5 billion in Goldman Sachs.
He bought preferred shares with a 10% annual dividend plus warrants to buy $5 billion of stock at $115 per share.
He made sure Goldman's execs couldn't sell their own shares before him. That's confidence and control.
And it paid off. Goldman repaid the government TARP loan within 8 months, and Buffett earned hundreds of millions in dividends and equity gains.
Next stop, General Electric. In October 2008, Berkshire invested $3 billion in GE with similar terms. 10% preferred stock and warrants at $22.25.
GE needed the capital. Their finance arm was getting hammered. But Buffett's investment wasn't just cash. It was a vote of confidence. By 2011, GE bought back the preferred shares. Add in dividends and equity sales later, Buffett made around $1.5 billion. Meanwhile, Charlie Munger, as chairman of Daily Journal, made a legendary move. In March 2009, literally the market bottom, he went all in with Daily Journal's $20.4 million into Wells Fargo and Bank of America.
Everyone else was panicking. Munger, calm, rational, focused.
And by 2015, that $20 million turned into $131 million. No joke.
So what guided these bold decisions? It wasn't luck.
It was value investing, patience, rationality, and for Munger, mental models.
Buffett says, risk comes from not knowing what you're doing. They knew what they were doing.
And Munger once said, take a simple idea and take it seriously. That's what they did.
The reactions to the 2008 market conditions are the same reactions that are happening today in response to tariffs and other external forces. However, this is the time to take what Buffett and Munger have taught us. It is the best time to invest and be fearless when others are fearful. Currently, there is a lot of value out there. Buffett invested in BYD, the Chinese electric vehicle company, to the tune of $240 million. Now, BYD is one of the most successful EV companies in China. If you have cash on the sidelines, now is the time to get into the market and take advantage of these historically low prices. See your profits balloon over the next few years. Grab your financial freedom by the horns and start looking for value in the market now. So, what can you learn from Buffett and Munger?
Keep cash for opportunities. Buy great businesses at fair prices. And stay rational, especially when the world loses its mind.
If you loved this breakdown, subscribe, hit the bell icon, and comment below. What would you have done in 2008?
This is KTM Investing 360. See you next time.